how worried from a market perspective are you about a deterioration in U.S. China relations?
Of course, it's a concern. I think there's so many concerns right now for investors to try to weigh. It can be really exhausting. And then when you think about the November election as well, that's absolutely going to create volatility. But what we're telling our clients is to stay invested. We haven't changed our long-term strategic allocations. And furthermore, I think for investors that might have gotten out of the market back in March, you know, it's tough to try to make a call of when to get back in. And we've actually been working with clients that might have sold a business, sold a house, had a liquidity event to create a dollar cost averaging schedule. So you're removing the emotion out of it, because China trade, the November elections, there's going to be volatility, and it's going to be tough to try to judge, you know, is that a low?
Michelle, while I'm with you, I'm going to stick with you for just a second. Crude is up about 20% over the course of this week, pressing in on $30 a barrel. What does it mean? What does it tell you?
Well, I mean, it's certainly been volatile. I think as an asset class, we choose not to invest in commodities. And I think the volatility has shown that it's been all over the map the past few weeks. I think crude being up is probably positive, potentially, that maybe that's showing a sign that the economy is going to get back on track. But again, it's just a few days volatility, and it's really hard to say.
Ron, I want to get your reaction to a comment yesterday by Dan Arbess of Zarian Investments. I know you know him, in which he sort of went after the Fed and, by extension, also the fiscal side for the amount of sort of tonnage money that has been pumped into the market. Let's listen to the soundbite. Get your reaction to it.
Rates are going to go higher at the worst possible time for the economy, and I don't care what Paul McCulloch or other experts have to say. I disagree that we can just pretend it's nothing and just throw whatever money we can at it. That is classic maladaptive economic strategy. I'm sorry.
Part of his argument there, Ron, is that at some point, when go ahead. I mean, part of the argument was that at some point the bills are going to come due, and you're flooding so much new Treasury issuance into the market at a time where the world may not be as devoted to the dollar as a reserve currency, and that the result could be higher interest rates. You got to pay more to attract the buyers to absorb the supply.
Yeah, I have longer-term concerns, Tyler, clearly about the size of deficits and the accumulation of debt. Having said that, you're in between a rock and a hard place here. Revenues were going to fall in the midst of this depression/recession, whatever it turns out to be ultimately. So the government was going to run extraordinarily large federal budget deficits, as are the states, municipalities, and cities. So issuing debt to try to provide relief for the economy and support economic activity going forward is one of two choices that you have. Neither one, as Paul McCulley suggested yesterday, is all that great. Having said that, if the bond market was going to find this maladaptive economic behavior so loathsome and so burdensome, rates would already be up. We're borrowing $3 trillion this quarter, and the yield on the 10-year Treasury right now is 0.64%. I mean, any time in the past, if you would have said and suggested that we would borrow $3 trillion in a quarter, run a $4 trillion annual deficit, and the yield on the 10-year Treasury would be below 1%, and the 30-year would be at 1.3%, people would have thought you crazy. And yet that's exactly what's going on. So the notion that interest rates spike and the dollar collapses, I think at this juncture in time makes absolutely no sense. The dollar is still used in 80% of all economic activity around the world, and 95% or so of all foreign exchange transactions. So if there's something going on that's maladaptive, I would argue that it was that gentleman's reasoning.